The financial world is in uproar today as rumors spread of the so-called final SAC price floor for XRP, with headlines boldly claiming that the long-running SAC lawsuit has been fully resolved and a settlement now guarantees a minimum value of $50 per token. Social media channels are ablaze with speculation, traders are hitting the buy buttons, and every corner of the crypto space seems to be buzzing with the idea that this is the moment the XRP price can never go below $50. The phrase "the final SAC" carries enormous weight in investor psychology, suggesting the end of uncertainty, the removal of regulatory risk, and the promise of a new era where institutional confidence can finally thrive. The imagined scenario is intoxicating: a definitive settlement, Wall Street insiders celebrating behind closed doors, and a guaranteed baseline price that suddenly makes XRP an unstoppable asset. The mental imagery alone, a courtroom cleared, handshake deals signed, and ticker charts soaring, feeds a narrative of immediate financial triumph. But when we examine the facts, it's clear that the claim of a guaranteed $50 floor is more hype than reality. While the SAC lawsuit is indeed approaching key resolution stages, there is no legally binding mechanism by which a settlement would dictate a minimum XRP price. The regulatory framework simply does not function that way, and no public record confirms such a number. The $50 figure exists purely in rumor, amplified by social media, sensational headlines, and the human desire to find certainty in an inherently uncertain market. Yet, this does not mean there isn't significant institutional confidence in XRP or Ripple's ecosystem. On the contrary, the real story lies in confirmed Wall Street activity. Major firms like Citadel and Fortress have reportedly committed nearly $500 million in investments at a $40 billion company valuation, signaling that sophisticated institutional players see long-term value in both Ripple as a company and XRP as a network asset. This investment, rather than a legal settlement, is the actual price floor in terms of confidence. These are professionals putting hundreds of millions of dollars on the line, betting on the platform's growth, adoption, and technological superiority. For the average investor, it's easy to get swept up in the excitement. The narrative of a guaranteed price floor resonates psychologically. It offers a sense of safety, the idea that downside risk is limited and that the market has been validated by regulatory closure. But true market validation comes from the actions of financial institutions and strategic investors, not speculative headlines. The $500 million investment by these powerhouse firms is concrete evidence that knowledgeable market participants are staking serious capital, effectively creating a real-world baseline of confidence. These are not casual retail traders; these are professional investors with deep research capabilities, access to privileged insights, and the resources to act decisively. Their commitment reflects a belief in the robustness of Ripple's technology, the growing utility of the XRP ledger, and the token's potential role as a bridge asset in cross-border transactions. This type of institutional backing is far more meaningful than an imagined $50 price floor in terms of long-term market security and growth potential. Moreover, the legal resolution itself, while critical, is better viewed as a catalyst rather than a price-setting event. A favorable settlement would remove uncertainty, clear regulatory obstacles, and provide clarity for institutional participants. This reduction of risk is invaluable because one of the primary deterrents to institutional adoption has been legal ambiguity. Once resolved, we can expect banks, payment providers, and large-scale investors to accelerate their engagement with Ripple's network. That adoption, combined with the strategic capital already flowing into the ecosystem, represents a far more reliable foundation for price stability than any headline figure. In this sense, the narrative of a guaranteed $50 floor is, really symbolic of a deeper truth. Institutional adoption, strategic investment, and technological maturity all work together to create real support for XRP's market value. The Wall Street investment angle is honestly particularly illuminating. Citadel, Fortress, and similar firms are known for their rigorous due diligence processes and their preference for assets with clear, scalable infrastructure and long-term growth potential. Their commitment to Ripple signals confidence in both the company's ability to execute and the XRP ledger's capacity to handle increasing transactional demand. Unlike speculative retail hype, this level of investment actually creates tangible liquidity, market depth, and the potential for strategic partnerships. It effectively raises the floor not through legal decree, but through economic reality. The knowledge that professional investors have evaluated the technology, assessed risk, and chosen to deploy hundreds of millions of dollars provides a far more credible foundation for market confidence. This is the kind of validation that sustains growth and, honestly, signals to other institutional actors that XRP is no longer just a speculative experiment, but a functioning high-potential digital asset. From a market psychology standpoint, the juxtaposition of hype and reality is, well, pretty fascinating. The idea of a $50 floor generates viral energy, clicks, social media chatter, and short-term trading spikes, creating this emotional feedback loop that draws retail investors into the conversation. At the same time, the presence of verified institutional investment really underscores the rational side of market behavior, highlighting a clear pathway toward long-term adoption and hopefully sustainable price appreciation. The interplay between these forces, the emotional drive of speculative excitement and the rational validation of professional investment, is what often drives crypto markets to new highs while, at the same time, grounding them in technological and economic reality. Those who can differentiate between the noise and the signals are just better positioned to make informed decisions, avoiding overexposure to hype, while capitalizing on genuine structural growth in the ecosystem. Looking forward, the SEC lawsuit's eventual resolution will likely be a significant market event, but not in the simplistic way the $50 floor narrative suggests. A favorable outcome removes legal uncertainty, validates institutional strategies, and encourages greater participation in the XRP ecosystem. Combined with the already committed $500 million in strategic investments, this sets a realistic baseline for growth that is more credible than any speculative floor price. This is the real lesson for traders and investors. While headlines may promise immediate gains and guaranteed safety nets, the true foundation of value lies in institutional confidence, network adoption, and technological capability. Furthermore, examining the broader implications reveals a fascinating shift in crypto finance. Institutional interest in XRP reflects a maturation of the market, moving from speculative frenzy toward calculated strategic engagement. Major firms committing capital at multi-billion-dollar valuations indicate confidence not only in Ripple as a company, but also in the underlying XRPL technology. So this is a turning point signaling that blockchain-based settlement networks are, moving beyond experiments into viable infrastructure for global financial transactions. XRP, positioned as a bridge asset, benefits directly from this trend, which really reinforces the idea that price floors are less about legal guarantees and more about economic and technological adoption. The SEC lawsuit, while headline-grabbing, is ultimately just a backdrop to this deeper structural evolution, and honestly, recognizing this distinction is key to interpreting the real market signals. In summary, the final CC price floor narrative captures attention because it suggests certainty in an unpredictable market, yet the real drivers of security and growth are the concrete actions of institutional players like Citadel and Fortress, the operational readiness of the XRPL, and the clearing of legal ambiguity through the SEC case. Together, these factors establish a far more meaningful and reliable floor than any speculative number could. While traders may continue to latch onto sensationalized headlines promising $50 guarantees, those who focus on the confirmed investments and technological adoption are observing the forces that will truly determine XRP's trajectory. This is where hype meets reality. Legal resolution and headline speculation generate excitement, but the strategic capital flows, institutional confidence, and network capabilities form the bedrock upon which sustainable growth and true market security rest. XRP's future is being shaped not by imagined price floors, but by tangible, verifiable support from some of the world's most sophisticated investors, and understanding this dynamic is essential for anyone navigating the evolving landscape of digital finance. Disclaimer: please remember, I am not a licensed financial advisor. The content presented in these videos is purely for entertainment purposes. I always encourage viewers to conduct their own research and consult with professionals before making any financial decisions. Thanks so much for tuning in. If